The economy registered a slight uptick during the final quarter of last year, with growth coming in at 0.1%. According to Stats SA, 6 of the 10 industries kept the economy in the green. The transport, storage and communication industry made the biggest impact. Despite the rise, the prints come in well below expectations, reflecting the effect of energy constraints and the logistical inefficiencies in the production side of the economy. The market expected an expansion of 0.3%. Netbank has reported an 11% rise in annual profit. That's thanks to strong revenue and associate income growth. But one dark spot on the firm's balance sheet is its credit loss ratio. This measures bad loans as a percentage of total loans, and this metric rose to 109 basis points from 89 basis points a year earlier. It is also now beyond the bank's target range of 80 to 100 basis points. That's as consumers struggle to service debts in an environment where they are weighed down by high inflation and elevated interest rates. Sibanye-Stillwater's plunged into the red. The diversified miner has posted an annual loss of 37.4 billion rand. It's pointed to substantial declines in metal prices. Sibanye says that, along with an uncertain outlook and some operational performance factors, also led to impairments worth over 47 billion rand. Sibanye, meanwhile, is confident that the PGM price weakness seen in 2023 is temporary in nature and says it's beginning to see signs which support a better demand outlook. Curo has presented its 2023 report card to the market. The private education group has achieved a 15% rise in revenue and a 32% jump in recurring headline earnings per share. That's as learner numbers and tuition fees increased, but earnings per share took a knock, plunging 83%. This reflects the impairment charges the group took to account for lower yielding school assets. A final dividend of 14 cents per share has been declared. Shoprite has rung up profits during its first half. South Africa's biggest supermarket group has reported a 7.6% rise in diluted headline earnings per share. That's thanks to a record Black Friday and festive season as cash-strapped shoppers and upmarket consumers sought out food deals. Shoprite also managed to extend the period of uninterrupted market share gains in its core South African market business to 58 months. An interim dividend of R2.67 has been declared, which reflects growth of 7.7%. WBHO has posted a 29% jump in half-year revenue. The construction firm says this is due to increased activity across all its divisions over the 6-month period, and that helped lift headline earnings per share from total operations by 42%. An interim dividend of R2.30 has been declared. Canal Plus has upped its offer for multi-choice. The French media giant has stated that it will pay R125 per share for the DStv owner. This compares to its initial offer of R105 per share, which MultiChoice rejected, saying it severely undervalued the firm. Canal Plus is MultiChoice's biggest shareholder and is looking to take full control of the company to grow its presence in Africa. Further afield, the shares of Tata Motors, India's leading car maker, reached a record high on following the announcement that the company will undergo a split into 2 listed firms. Here's more detail in this package report.
Land Rover maker Tata Motors saw its shares hit record highs Tuesday. They climbed over the day after the Indian firm revealed plans to split its car and truck businesses into separate units. Tata says that will allow it to compete better with Indian market leader Maruti Suzuki. It also anticipates a possible stock listing in the country by South Korean rival Hyundai. Now the cars unit will house Tata's lucrative Jaguar Land Rover operation. The company was the best performing stock among Indian automakers last year as it turned profitable on the back of strong luxury vehicle sales. It's risen another third this year, far outperforming the overall rise in local auto stocks. Analysts say the demerger should allow both the car and truck businesses to operate with greater freedom. Tata says shareholders will have an identical holding in both firms after the split. The company says the proposal will now be presented to the board. It says it will take a year or more after that to get the necessary approvals.
And in the first 6 weeks of 2024, Apple experienced a significant decline in iPhone sales in China, with a 24% decrease compared to the previous year. Let's take a look at this report for more.
Apple's iPhone sales in China fell 24% on the year in the first 6 weeks of 2024. That's according to leading research firm Counterpoint. The US company took a hit due to stronger competition from domestic Chinese competitors. The report said Apple's main local rival Huawei saw unit sales up 64% in the period. Apple dropped to 4th place in terms of Chinese market share. It was second in the same period last year when it made up almost a fifth of the market. Huawei took that position as its market share expanded to 16.5% from just under a tenth a year earlier. But the report showed the overall smartphone market in China shrank 7%. Apple began subsidizing certain iPhone models in the country by as much as $180 last week. It had already offered discounts on its official sites last month. Huawei has seen premium smartphone sales rise since it released its Mate 60 series in August. The firm had struggled for years with US restrictions placed on it, but sales suggest it is finally seeing a way out of trouble.